All right, well, plant-based meat company Beyond Meat impressed investors with the hottest IPO of 2019 so far. The stock surged more than 160% in its debut earlier this month. That marked the hottest first day of trading for any company with a market cap of more than $200 million since Palm did it back in the year 2000. But did that hot start, I should say, set it up for a big drop from here? That's what our next guest is betting on, the first fund manager to short the high-flying stock. Harrington Alpha Fund founder Bruce Cox joins us on the phone from Atlanta. Bruce, I want to ask you first, though. A lot of people were excited about this name. We got Leonardo DiCaprio as an early investor and Bill Gates as well. Why are you betting against them?
Well, at a certain valuation, right?
Yeah.
At $25, I thought that was a reasonable price to bring it out. Stock quickly opened at 45 and went to 80 in a very short period of time. And I think it's widely known that they're losing lots of money. They lost almost $30 million last year on $87 million in revenue. And they've got competition, which is documented, Tyson, Nestle, Impossible Foods, all coming into the space. So the valuation on any metric seems way out of control. So that's the reason. It's just wildly overvalued. They're not making money. And my guess is when the Goldman and J.P. Morgan and Credit Suisse initiate it, they'll probably be very cautious, if not negative, if it stays at this valuation.
I want to ask you about that, though, because we did see a net loss of about $30 million when we look at what they posted last year. But on the flip side, their growth rate, 169%, is probably the highest when you look at some of the other names that we've seen in 2019 come out. That's higher than Zoom's growth rate, much higher than Uber's growth rate, since we're talking about that stock. So, I mean, does that factor in at all to what you're betting on here, thinking that Beyond Meat's going to have a tough go from here?
Well, yeah, I mean, but at 50 times sales, right? I mean, what do you pay for that growth rate? Mm-hmm. And like I said, it's pretty well known that other people are coming in the space. And have said so. You know, Tyson said so, as did Nestle. I believe they were just on Mad Money the other night. So, yeah, I mean, the valuation just seems way out of line with what the company's current revenue and current losses. So my guess is that you'll see, and also another indication of rampant speculation is the fact the float, it was a small deal at 9.6 million shares. But the entire float turned over 9 times in the first 6 days, right? So, which is usually a sign of just massive trading and speculation, and also they recently just listed options, which will make the name more liquid and able to have two-way.
Got it.
Action.
And what's the timing on this? I know, I mean, listen, I agree with you. I think at this point it is overpriced, particularly with the competition coming into the market. But, you know, as you know, you're taking a short position here. What's the timing look like? You know, will this really be reflected in here in the near term? I know there's a lot of investors that are in love with this company because they love the brand. And so do you think that this will be something that'll happen in the short term?
I do, yeah. And I think by the time the coverage comes out, which I think is the 28th when they're eligible to publish on it. Yeah, I think you'll have more people paying attention to the valuation of where it's trading, and I think Jim Cramer's been mentioning it constantly, and he thought at $35 it was a nosebleed valuation, right? And now we're trading at 67 a couple days later, right? I mean, so I think, yeah, I do think in the near term, as people get more focused on what the company, how much they're making and are not making, that people realize that the valuation is just way out of line.
It's come down a bit, though. We're seeing it now trade closer to about 40 to 45 times last year's sales. It's funny to see Uber trading around 7 times last year's sales, of course, at a much larger company. All right, Bruce Cox, thanks so much for joining us. Really appreciate you taking the time.